Good evening, traders. Adam here for Bull Logic doing our Sunday night market analysis. Hopefully, everybody had a good weekend. I know mine was relaxing. Got to watch the Texans beat the Baltimore Ravens, so that's always a plus for me. But it's time to get on with the market, time to get prepared for the week ahead. Now, as everybody knows, Friday was a devastating day to the market. We were calling for a pullback after the touch here in this upper trend line, but what we got Friday was just ridiculous. We didn't expect the pullback to happen all on one day. So, whoops. Market came crashing down 1.66% on the S&P, finished at the 50-day moving average. So we'll have to see if that's going to act as any kind of support going into tomorrow. I wouldn't expect it to act as support right away. We just need to really see if the 1420 level holds. That's going to be the main level that we're watching. I wouldn't really worry about the 50-day moving average right now, just because I got a feeling there'll be a lot of flow through or a lot of continuation on till tomorrow from Friday's big move. Last week, even though we did see the big down day Friday and the small down day Thursday, we were still up on the week. As you see, the first 3 days were nice and pushing into that upper trend line, and then the last 2 days just came crashing down back to the lower trend line. That's the joys of working in this range-bound market. You're just moving from one side to the other. It's very typical. So we came to expect that big move or we came to expect a move to the downside just because we were running into resistance. So what we're seeing is very typical. It's just the velocity of the move is a little bit more than we are actually expecting. But how can you blame them with all these big misses we're getting in the earnings? Microsoft, boom, down 3% on a earnings miss. IBM getting destroyed up at 211, now down at 190. CMG, Chipotle, down 15% on an earnings miss. These are just the big guys. And as everybody knows, Google, down 2%, down 2% on Friday, down 10% on Thursday. These guys are not helping the market here. These big companies missing after missing after missing, cutting forecasts, whatever, is not helping get the market's footing. It's not going to help the market push higher. It's just going to bring selling back in. So this is something we're going to have to watch out for, especially coming up this Thursday. After the market close, we have Apple and Amazon reporting. And let's just, for the market's sake, hope that they throw out there something good and some kind of beats and some kind of increased forecast, just because we need a little push here. Look at the NASDAQ getting crushed here, broke below our support here, completed this head and shoulders pattern perfectly, might I add. They expect us to touch that 200-day moving average, especially if Apple and Amazon can't get us going in the other direction. Broke under this trend line that we have formed since June. So definitely a lot of weakness here. Definitely the most weakness is coming into the NASDAQ. Russell 2000, not as bad here. We are sitting on support. We have support a little bit lower. We did break through that 50-day moving average, which is the killer on this one, but we do have some support coming in. We're going to have to see if that's going to hold that 820 level. We got the 200-day moving average and then the 812 level here on this lower trend line to come in as support. We're going to have to see if any of those levels are going to hold going into next week. Some of the before I get into sectors, just point out, yes, VIX had a nice bump, a little bit more than what the S&P move was expecting, a 1.6% move. You expect 10, 11% up in the VIX, so a little bit overshoot of what we actually had, but with the kind of selling that came in, it's very understandable that the fear index or the VIX gets shot up like that. Looking at different sectors, not seeing many good ones. We have energy, it's okay, down 1.5% on Friday. Utilities have been doing pretty good, only down 0.8%. As you probably know, this is a defensive sector. A lot of times the money will roll into the utility sector. When the market is starting to come down, it's a slow mover. It's easier, a lot of dividend stocks. So seeing this one up is not always a good thing. So just keep an eye on that. Materials, not that good here, down 2% today. Looks like it's going to go through those moving day averages. Technology, wow. I mean, this thing is just getting killed after killed. I mean, just stair-stepping it down. This is key trend here. Lower highs, lower lows. I mean, we're just pushing it lower. Close on the lows, down 2.27%. Definitely looks like it's going to go through that 200-day moving average. Financials actually looking pretty good here. Financial sector still holding this upward range. Got the higher highs, higher lows. This would be our line in the sand at 1580. That's going to be where the low was. Watch that area. If we can hold above this, then the uptrend is going to remain, and maybe the financial sector is something we're going to want to look into for our stocks. That's one we're going to look into for the plays going into next week. Biotech's getting killed. Broke through that 50-day moving average. Just couldn't cut anymore. You got this series of lower highs, lower lows, very textbook, lower trend. And we just saw that come through on Friday as it finished down 3.79%. So, not much good is happening right now in the market. We do have some support levels coming in. That 1420 is going to be our main support level on the S&P. As we go back in time. Let me get even a bigger chart here. We go back in time, we see that 1420 level is our main support. It held here in the 07-08. It came back here recently this year as main supports. So this is our big support level. That is our line in the sand level. So we need to watch that going forward. We're going to have to see how the market's going to act at that 1420 level. Bulls need it to hold so we can get a bounce out of this. Bears are going to look just to crush through it. Now, we might get a flush through that 1420 level and then a pullback through it. We might overshoot it and then come back through it. We talked about many times how the big markets will overshoot something and then come back through. So it's not always a clean number, so I have to see just how it's going to act. Can we push through it and then pull back into it? That's always a good sign. That's a good sign we might get a bounce. Now, going into next week, we do have some news coming out. Monday's going to be a pretty quiet day, but then Tuesday, we're going to start the Fed meeting. We're going to come out with some the Red Book, the manufacturing index. On Wednesday, we do have new home sales, the petroleum status, and then the big one's going to be FOMC meeting here at 2:15 Eastern Time. Thursday, we got our jobless claims, our durable good orders, and Friday, we had the GDP and consumer sentiment. Remember, Thursday, we also have Apple and Amazon reporting after the close, so we are going to have to keep a keen eye on that. So that's our levels that we're going to watch. Again, the 1420, we don't think the 50-day moving average is going to hold, but we hope the 1420 will. We'll have to watch that and see how the market is going to react there. Even though the market was down big on Friday, we are still seeing lots of charts set up. Make sure you check out our watch list. We got some bunch of long and a bunch of shorts, so the charts are still setting up here. They haven't gotten too far, out of whack. So definitely got a lot of good setups. Make sure you check those out, and we'll talk to you again tomorrow night. Thank you.